Okay, this article is coming from investing.com. Silver, worst month in 3 years, could just be the start. After rallying from September to December, silver's lost 13% in February, its worst month since 2020. Charts suggest a break below key $20 support next, stopping at 1880. The dollar's resurgence could complicate any near-term rebound for silver, with the dollar index futures hitting 8-week highs. On a continued rise in U.S. rate hike expectations. More ill portends for silver, say the chartists. They forecast a drop to the $18 region for the white metal, even as its more illustrious cousin, gold, known as the yellow metal, appears to have a fair chance of beating back bears who want to take it below 1800. Now, this article came out on February 28th, so it is a week old. So let's just go to the silver charts. Let's zoom out to the monthly chart. So, according to the monthly chart, price is stuck between, I'm going to say 25 and say 18. This red candle here is February. Reason why it did not close at the lows, because you had people taking their profits. So as they shorted, they got out of their position, so they had to buy. And for 1 week we have a doji candle, but it is green, so there's still some indecision. You can say that this is the current range for the month. But I would anticipate a breakout because we're only in the first week of March. Let's go to do the weekly. Okay, I'm going to zoom back out to the monthly for a second. Okay. So it appears that price likes this area. Okay, you have some spikes in price and then it sells off. So resistance, resistance. Price did breach it. You have support, support. Potentially you have support. Alright, so if we go down to the weekly, we can see that the momentum is to the downside. A break below $20.50. There's nothing stopping price from getting down to the, say, $19 level. If we break up to the upside, price is going to have to deal with this little wick here, which indicates some selling pressure at the 2175 level. Let's go down to the daily. So we had a gap in price. from Wednesday to Thursday of last week. Price is currently bouncing off the 200-day moving average. Price is making higher lows. Yeah, this is a chart you just sit on your hands for now, at least until you get out of this range here. Now, if I was day trading this range, I would be short below $20.50. On the upside, let's just go down to the 8-hour, let's go down to the 4-hour chart. A breakout out of this range here, we could take price to the 2062 level. Let's just go to the 1-hour chart. Yeah, so right now I'm not seeing any sellers until we get to that same level I called out, the 2165. Let's go down to the 15-minute chart. Alright, so this is late in the day on Friday. No real volume kicks in until Alright, so this is I think the service ISM report on Friday, where price sold off initially and then started rising as the dollar tanked. I mean, this is where the volume really kicks in. And then you had another surge midday. And then this is the 3 o'clock to the close. So, you know, if price is going to decline Sunday evening in the futures, price may want to retrace to the 2125 level, which is where you had some pivot highs on the 50-minute chart. If we get a break higher, you know, price would have to deal with this little indecision candle here at 2150. So from a macro level, I would be sitting on my hands. From a day trading opportunity, you break out of this upper range, you can take that higher to the 2162. If you break down, maybe you get a bounce at the 2125 level. So that's how I would look at the charts from a day trading standpoint. From a macro trading standpoint, I'm sitting on my hands at the moment. Until next time.